What is going on, guys? Good evening. It's your favorite mortgage lender, Abdel Kwame, Gaunt Mortgages. I appreciate you guys jumping on, whether you're watching this live or later on. We're going to touch base on a lot of different stuff. I purposely wanted to hold off into today in order to talk about what is happening on the market. We got some updates literally today on existing home sales. We got some updates on builder sentiment and confidence. But I want to kind of take a step back and really just look at where things were last week when it came specifically to inflation. Why are interest rates still remaining at really that little sticky part of where we're kind of staying over that 7% mark? As we usually do, we will explain all of this together. What are going to be a big aspects of what we're looking forward to later on when it comes to the PCE report, personal consumption expenditure report. But we're going to talk first about inflation, specifically with the annual inflation. We're going to start off on the consumer side. So again, consumer spending really has been kind of coming in closer to expectations. Those year over year numbers, there's a lot of different, obviously, variations to it when we take a look at this. But we are starting to see, again, this data is based on 12 months, right? So when we go back and replace some of the data from 2023 into now, we are going to be renewing some of those older numbers, which kind of throws a lot of the 12-year lag of data in place, right? So as we can kind of see at the core, we've been pretty flat. Of course, on the headline, it kind of ticked up. The core removes energy at the same time and costs, so that obviously makes it. But you can kind of see here on the 3 of course, it jumped up to 3.5. But really, we're getting close to that 2% mark as we look at the 6-month mark, right? So again, we know that the Fed was aggressively cutting interest rates, right, over the last 2 times. And let's not forget, they were hiking it for quite some time, right? All the way back from March 2022, they kept hiking rates to the point where it got to 5.75. We've now seen twice cuts, 50 basis points and 25 basis points. I do anticipate us hopefully to see another cut, but we'll see a lot of the different data. We've got so much data that we'll be looking at before that actually comes into fruition. Now, when we take a look at, of course, what Jerome Powell said just last week, the economy is not sending any signals for us to be in a hurry to lower interest rates. So I think that's kind of the part where we really want to kind of monitor and see exactly what is going to be their potential expectations as we get some additional incoming data, specifically with employment. We saw earlier, right, on the employment front, that employment was pretty much slowing down. Unemployment at one point, continuing jobless claims, the highest it's been in over 3 years, closer to COVID times, right? Then we saw wholesale. On the wholesale side, came in close, higher at 0.2%, but it is kind of stalling, right? And that's why I say we're kind of at that sticky point right now where the Fed is cautious on any significant changes within the market. And truly just the market consensus in and of itself is, do we continue cutting interest rates, or do we kind of just let the status be and continue on this trend of higher for longer, which I'm not necessarily opposed to be honest, as much as I would love for interest rates to drop. Guys, we're still dealing specifically on our side of the East Coast with New Jersey. We're still dealing with multiple continuous offer situations, right? And we're going into the holiday season. Holiday seasons generally tends to be a little bit of quieter time, although the last 3-4 years really wasn't any seasons, right? From COVID times, I mean, it was always cranking away. People were moving their kids out, if it was in the middle of the year or wherever it is, making it a major impact for them, right? We also got updates on the retail sales numbers that came out on Thursday, rose just a little bit of 0.4%. Now, one thing that's important for us to monitor within that is that it does plug in a little bit with the GDP, gross domestic product, which again, we'll get updates on the personal consumption expenditure report, which is also known as the Fed deflator, and kind of see how that kind of contributes to what the potential that the Federal Reserve will really look at into their December meeting. I talked briefly on unemployment. Again, initial jobless claims were a little on the lower side, but once again, continuing jobless claims. The second people are let go, they are simultaneously going and having a difficult time, once again, finding jobs, topping over 1.8 million again for over 23 consecutive weeks. Okay. So again, this week we know we got updates, and I wanted to share this specifically on builder confidence and housing starts. So when we talk about builder confidence, actually rose 3 points to 46. It's based honestly on a contraction of 50. When it comes to current home sales, it rose 2 points to 49. It's the highest it's been since May. Future expectations jumped up again, positive notations of what we want to look forward to when we look at the market. We look at buyer traffic. Buyer traffic, of course, is a little on the lower side, but once again is the highest it's been. So current sales, future expectations, and buyer traffic, all three are the highest in terms of expectations, which is awesome, which kind of shows us that builders are a little bit more confident. Although housing starts and permits has slowed down, we do know into the near future, there's obviously that consensus that the market is going to be, as I said, bananas. We're going to start seeing a lot of different things. Now, it's kind of like a double-edged sword when we look at housing starts and permits, because mainly because we do obviously want to have more inventory and more accessibility. We don't want to also have an overage of it. So that is something that we're obviously keeping a mind on in an effort to make sure that we don't run into issues like we did back in the housing bubble, which we are nowhere near right looking at. We're still obviously supportive of home values, just such a typical supply and demand 101 shortage of homes. And that's kind of what we're dealing with, right? Now, if we kind of take a look at the market, I went as far back for us as we basically could for the year, January 1st, 2024, kind of sort of back to really where we were, right? I think we just hit 7.04 today, which was actually the same exact rate as pretty much what it was just about, February of 2015, or I'm sorry, February 15th. And as you can kind of see, right, rates kind of trickled down, trickled up. We've been on that thing. This was obviously a great run when we saw that reduction, and then boom, the Fed cut. And since then, we've been a little bit on that stubborn pace of interest rates kind of going up. I do, again, anticipate them to eventually switch. The true timing of this is just going to be when, right? Will we see those fluctuations? So, of course, I'll keep you guys updated. We don't really have too much market movements that are going to be happening this week. We already got the consensus on that. We will get existing home sales on Thursday. We'll kind of see how that data comes in, and then we'll take it from there, okay? I appreciate you guys jumping on. As always, this video will be uploaded on our gotmortgages.com website within our blog section. We do it every single week. Make sure you guys tune in, and I will catch you guys next week. Have a great day.